Today is April 4, 3:26 p.m. and we saw some unusual options on Shopify. That's SHOP. And we wanted to let everybody know and then also suggest another trade idea that's different than the unusual options. So just technically, we could see that it is overbought on the stochastic oscillator. It is on a bullish trend, so it could pull back, but it looks like it could still continue that bullish trend, especially since it has gapped. It's currently trying to fill this gap here because we are right here. So we're in that middle of that gap. So there's less resistance and support levels while filling this gap on the way up. So let's take a look at the unusual options. Currently, also the IV is pretty low at 8%, and then the options tape here shows us these unusual options at 10:06. You'll see this here. You will see that it's actually a 3 legs. However, we believe that one of these legs is actually a closing order, this April 6th, which expires in 2 days. Okay, so these total contracts are 2,819 of them. So it looks to us like they bought the 50 calls and sold the 60 calls for May. And when you look at the April 6th, you'll see that here the 42 strikes here have a closing, have a volume that is less than the open interest. So it's possible that these trades at the 42 are closing the open interest orders. Okay, so keep that in mind. And then what we think is then on May 19, they are buying the 50 calls and then selling the 60 calls. Okay, so that's their order, and we'll take a quick look at it, and then we'll show you our order, which is right here. This is our order. And the reason why we did it as well, we'll explain that. So this is their vertical bullish trade, which is right here. It is profitable as the price goes up from the current position at 47.5, and it'll be profitable because it is above the zero profit loss diagram. You'll see that. So the thing about this trade, though, is that it expires in 45 days. And since we are overbought, we are a little concerned like maybe it will pull back. And then as it pulls back, there is a -2 theta decay. So with the timing and everything, we don't quite, are not as bullish. And so we want to try to minimize this theta decay while still having a bullish delta. So what we propose is this trade. What we've done is instead of buying and selling on this date, we sold the 55s, and then we bought the Junes for the 50 strikes here. And you'll see our position also here, and there's currently already that amount of volume. So you see that there. So then if we do this trade, you'll see that it's a diagonal trade. It's currently going for 249. So it's about the same price as the unusual options. Okay. But the difference is that you could see here that the theta is not negative. It's close to 0 and slightly positive, 0.19. So and it's still a positive delta, so it does gain as the price moves up, and so that's what we like about this trade. Same thing is also it's a positive vega, you'll see here, and if we look back at that original unusual options trade, it is also a positive vega at that about the same amount. So the so that's something to consider, and so if that's helpful to you, um, yeah, give us a like and comment below, and subscribe if you haven't, and hopefully Shopify continues to go up, and that the pullback isn't, there is a pullback, it isn't too long, and if it is, we are not going to be decaying as much with the theta, but hopefully it keeps going up. And take care, everybody, and good luck.